Chat with Traders, episode 134.
This is your key to the minds of trading's elite performers, those who profit in relentless markets. Here on the Chat with Traders podcast, you'll hear about the skill sets and tactics that lead winning traders to win, so you can level up and become a better trader. Here's your host, Aaron Fifield.
What's up, folks? I'm Aaron Fifield. This is Chat with Traders podcast, and I really do appreciate you for tuning in. Welcome. On this episode, I have a returning guest who first appeared on episode 53. His name is a mystery, but he goes by the handle BTCVIX. Now, episode 53, this was the first time I actually covered Bitcoin on the podcast, and that was at the very end of 2015. As you're probably aware, the cryptocurrency markets have evolved a lot since then. So my buddy BTCVIX is here to fill us in on what's been happening and potentially what lies ahead. We also cover how to acquire various cryptocurrencies, best practices for protecting your coins, is Bitcoin in a bubble, the frenzy surrounding ICOs, and much, much more. For context, I will mention this episode was recorded on the 21st of June 2017, and I also would like to let you know I have another Bitcoin episode coming out sometime soon, probably within the next few weeks, and this one is with Bobby Cho from DRW's Cumberland Mining, so stay tuned for that. But now, for episode 134, here is BTCVIX.
I actually was looking back to our last podcast, and I believe the price at the time was right around like $500 or $600.
Okay, I was going to ask you that actually, like how much was it last time we spoke? Because when we did the podcast initially, I think it was end of 2015.
Yeah, I'm pretty sure I think when you first asked me to come back on, I looked. I want to say it's right between 500 or 600. I can actually know. Let me just check 1 second right here. Yeah. Yep. That's about right.
Okay.
Actually 400. So December 20th, it was $462.
Okay. That's crazy.
That's crazy, isn't it? And just the space is blown up. I was actually going to try and meet up with you. You went and did that, like, what was it, like Traders and Beer or whatever in New York with Sanglucci?
Yeah. Are you in New York, are you?
I'm not actually. I'm over by Chicago, but I think it was a week or two later I was in New York, though, in Times Square for the Bitcoin conference.
Oh, okay.
I mean, a little over 2 years ago now, I went to a Bitcoin conference in the same area, not the same one, but there's maybe 300-400 people there. This time there was over 5,000.
Full on.
So, and I mean, just to see the growth in the space over that period of time, and everybody now is doing some kind of project. And we'll get into that with the whole ICOs and stuff like that. But
how do you feel about that? I mean, do you like seeing this sort of thing, or did you kind of like it when it was a little bit more underground and sort of the general public wasn't quite so aware about it?
I mean, I'm honestly happy. I'm maybe a little bit less cypherpunk than some of the people that were kind of originally in Bitcoin for those reasons. Kind of the same, the same community that kind of birthed the internet. Are they really happy with where the internet went from there? I don't know, but I mean, it serves a lot of people today and makes their life better, and I don't think we could live without it. So I think Bitcoin is, certainly being part of the internet revolution and the money of the internet. So yeah, I'm happy about it.
So what was that conference like? I mean, who were the sort of people who were speaking there?
Well, that's what's interesting too, is when I went there about 2 years ago, it was kind of, it was still, you still could feel that Bitcoin was small, right? It was a lot of very Bitcoin centric companies, like some company that was, doing Bitcoin ARB and, a couple wallet companies. This time, though, I mean, the names that were there and that were speaking, Deloitte, the CME group that runs the Chicago Mercantile Exchange, Fidelity was there. Citigroup was there. These are big names that everybody knows. So I think that was the real big difference between the conference of 2 years ago and this one is, wow, how far have we come? We have, very household names that are interested in the space and involved in it too.
Yeah. Actually, it's just come back to me, something I was going to ask you just before. How you said when we spoke, what was it, like back in 2015, towards the end there, Bitcoin was about $460, give or take. Do you recall people saying that was really expensive then? Was there any talk like that?
It's interesting because that time we talked, we had just broken out after almost a 9-month downtrend into a sideways where we were basically stuck between $200 and $300. So a lot of us, at least in the community that had survived the bear market, we thought like, wow, like, Bitcoin just doubled, at that time that we were talking. I don't know if we thought it was expensive and stuff, but we weren't getting the kind of publicity that we're getting now. And I can only kind of look at that a little bit in hindsight and compare it to the bubble prior that we fell from. But, the space had just kind of been left for dead for quite a while.
Yeah, the only reason I asked that is because I kind of get the vibe from different bits and pieces you read and headlines that pop up. There's certainly that idea that Bitcoin is very much overpriced and very expensive at the moment. How much is it right now?
As we sit here right now, it's 2660, call it. I mean, there's some variation in the exchanges, but 2600. It's interesting you bring that up, and we can definitely go into that in the podcast because I think this adoption wave has spawned what I call miss the boat syndrome type people. People basically that have heard of Bitcoin. They, maybe they read a few articles on it. Maybe they even bought, some just to see what it was about. But they were kind of more or less just observers, and they thought it was cool, it was neat, only to watch it go from say, 400 or 500 up to almost, touch 3,000 at one point. A lot of those people, I think, are almost like mentally or psychologically, predispositioned to not want to buy it now because they remember when it was $500. So then now the wave is, a lot of them bought Ether and a lot of these ICO projects that are coming out. So, I actually have friends that they know I've talked about Bitcoin forever. Some have even bought Bitcoin and sold it quickly, or they just didn't buy much. And now they like talk to me about Ether like it's the second coming of Christ.
And do you tend to agree or not quite?
I mean, I will say I underestimated Ether. I have to be very fair about that. Definitely a lot of potential that I missed. I just think Ether is more of an app-centric project, and there's a lot of potential that could far exceed anything that Bitcoin can do. Bitcoin transfers value really well. Ether can make a lot of these projects into incredible things, but that comes at a risk too. I mean, the DAO hack was a product of a missed bug in the code, basically. And I mean, yeah, they fixed it, but what's to say when we get to these complex projects and code that they're trying to put into Ether? It sounds really good right now, but let's see it actually play out. So I'm cautiously optimistic. After being a pretty big Ether skeptic, I've come around to appreciate it a lot more.
Okay. Well, I mean, we'll definitely talk about that a little more as we get into things. Just before we do, let's sort of, I guess, just go over some basics. I was having dinner the other night with my girlfriend and one of her friends, and somehow Bitcoin came up. I obviously brought it up. And my girlfriend's friend had never heard of it. And she's like, well, what is it? And I was kind of a little bit stuck on how to explain it. I was like, well, it's this decentralized kind of digital currency. She's like, okay, but like, what can you buy with it? Like, how can you use it? And I didn't really know what to say. So, I mean, I want to ask you, how do you explain Bitcoin to people outside of finance?
Yeah, and I'm glad you brought this up because I was looking down the list of questions and I felt pretty comfortable. And then I was even asking some of the people in my group, like, what do you do with this question? Because it's certainly been asked to me before. And I don't ever think I've mastered the way of actually explaining it. In short, I usually say it's digital cash or digital money. And, to kind of go further than that, you have to understand that, the internet prior to Bitcoin existing was, if I say I had a file on my computer, I could copy, paste, and send it to you, and you have the same file. So there is no such thing as digital scarcity. Bitcoin basically is one of the crowning achievements of it is it introduced a way to prove scarcity. And now you have a digital asset that has value and can be transferred, and there's no way that I can copy paste that to your bin and you can have that same value. That's where the blockchain comes in and where that ledger is verified. I don't know. Is that a good way to explain it? I don't know how deep you want me to go with it.
I think it is. Like, it certainly hits on the technology behind Bitcoin, but I think a lot of the confusion from people who are certainly outside of finance and maybe even quite a few people inside of finance are like, but where can you actually use it? Like, you can't really buy anything with it. I mean, there's the odd sort of site around that accepts Bitcoin, but for the most part, like, there's no real way for you to actually spend Bitcoin, is there, and actually use it to buy something?
Well, I would say that the dark markets would have, they would have a strong contention to that point because, whether it be ransomware related, drugs online, or actually one of the bigger spaces that's been growing and one that I'm a part of, the online gambling scene has been adopting, Bitcoin as a funding mechanism. So, obviously you're not going to Chipotle and paying for your Chipotle, but between the dark market and then there are actually a lot of gift card companies. It's just an app on your phone, Amazon, Target, Caribou, Whole Foods. Like, I can basically pay for all the stuff that I use almost daily with Bitcoin. But, there's a proxy there. I don't know if that's something you want me to explain because, still Bitcoin is best used for a lot of the nefarious things.
Well, tell us a little bit about that proxy. I mean, feel free to go into that if you like.
Well, the original, one of the first use cases of Bitcoin was on the Silk Road. And the Silk Road is this online drug bazaar that, they didn't take credit cards or Western Union or anything. They took Bitcoin because it has, when the transaction occurs, you have the asset. It's irreversible. There's no chargebacks. So, that's why it became really prominent in the drug space. And there is certainly, some people thought it was anonymous. There's kind of a confusion that Bitcoin is anonymous and untrackable, which is not true. And now we're actually seeing, we have Monero and we have Zcash that are trying to basically put that element of anonymous transactions to the final, the final place that Bitcoin couldn't get to. So, the dark markets are adopting those currencies as well.
Yeah. So, it's this sort of thing, you've just given a few examples of where you can use Bitcoin. Some of them are obviously household names, but then for a large part, it's still widely accepted and the main currency used on the dark web for buying things which you maybe shouldn't be buying. I don't really think that does any favors for people's like perception of Bitcoin, does it, when they hear that sort of thing?
No, it doesn't. And then my second part would probably be that its largest use case right now is still speculation. I mean, if you're not using it to buy such things as that, you're probably buying Bitcoin because you believe that, this fulfills a missing part of the internet. Credit cards aren't native to the internet. They have lots of issues. Bitcoin is kind of that next step, or more so, cryptocurrencies are the next step. So I think the kind of belief in the technology is going towards, the blockchain stuff. And that's kind of where a lot of people, I think, that have been critical of Bitcoin specifically are saying, well, no, I believe in the blockchain. But Bitcoin, I don't really know if it itself needs to have value. It's just, as we sit here today, it has the largest network effect. It's the most secure cryptocurrency on Earth currently, and that conduces a lot of value.
Yeah. So you said that just before that the transactions are not completely anonymous like a lot of people think they are. I mean, what parts of the transaction are not anonymous? Like how trackable is it?
Well, there's a couple different ways that they can actually pinpoint to you directly. Say you decide to buy your Bitcoins on an exchange where you have to provide, know your customer information, like a bank account. So if you go and buy Bitcoins on, say, Coinbase, and you send them somewhere, they know where you're sending them. Now, it could be that you send it to your personal wallet and you sell it to somebody on the street and it gets lost in there, but they actually, now know an identity in that chain. Also, there's, your IP address, depending where you send it from, can be tracked. I think that's why a lot of people that try and be anonymous with Bitcoin use the Tor network.
Okay, so is it always been that way, or is this something which has come about with more regulation and etc.?
It's always been that way. It's just the tools that law enforcement or those wanting to track transactions has improved quite greatly. And some of it's not just law enforcement. I mean, during the whole Mt. Gox hack and plenty of exchange hacks, people try and track where those coins have gone. Doesn't always necessarily mean they know who has them. I mean, they can see on the blockchain that's public and everybody can look at it. They know where those coins are sitting. It just depends if they end up interacting with somebody that can then identify them, or they leak their IP address or something to that effect.
Okay, right. So let's talk a bit about actually getting set up. I guess just for a bit of context here, I'm probably fall into that category of the boat which you described earlier, the people who, what was the analogy used? Wasn't fear of missing out.
It's kind of FOMO, but I actually call it now the missed boat syndrome people.
Right, yeah. So, I've been saying for probably the last 12 months, I really should buy some Bitcoin. I don't have no intentions of trading it. I just want to put some money into it, and just sit on it for a while and see what happens. The way I look at it, if I put a few $1,000s into it and it goes nowhere or it loses value, no big deal. It's not going to change my life. But if it continues on the path that it has been, then, it seems like a pretty good bet. So I was like, okay, I'll buy some Bitcoin, I'll buy some Ethereum. But when I actually came to do it, I didn't really know what was going on. I was a little bit confused by it because it's very different from opening a brokerage account and funding a brokerage account, isn't it? So do you just want to describe to us a little bit about how you'd actually go about opening an account if you wanted to buy, let's just stick with Bitcoin for this example?
Sure. And some of it is certainly dependent upon where you live, but I'll come at it from my perspective of being in the US. So as we stand right now, there's really two prominent avenues, I would say, that somebody in the U.S. would go about trying to get Bitcoins. Actually, three, but I'll gloss over one of them. Well-known company, Coinbase. It's Andreessen Horowitz, venture capital-backed company. They're out of San Francisco, and it acts much like setting up a PayPal account. You end up basically buying Bitcoin through an ACH transfer. I'm not entirely sure on the fees. I think it's 2%. Certainly a bit of fees there. Another avenue, I know you had Benjamin Small from Gemini on. You could wire money into Gemini, go on their exchange, buy Bitcoin that way. They also have a way to trade it directly. Coinbase does have an exchange. It's just not available in all states. So, we'll stop right there as far as obtaining Bitcoin. Now, trading Bitcoin is another page to turn that we can go down, but is that kind of the answer you're looking for?
Yeah. Okay. So essentially what you need to do is you need to open a wallet, don't you? You need to open a wallet or create a wallet, and then you need to put your fiat currency into that wallet, which is, in this case, a Bitcoin wallet. Is that correct?
Not totally. I mean, if you're using Coinbase or Gemini, you're effectively funding a wallet that they're in custody of. So you don't necessarily need to have a personal wallet if that's what you're going to do. Now, you can go down that path.
Even if it's on Coinbase, though, it is a wallet in some sense, isn't it? Like it's your wallet on Coinbase. Am I understanding that right?
Yes, but when you open an account, you're effectively opening up a wallet that's in their custody. Kind of similar to opening a bank account, right?
Okay. And so what's the alternative to that? Having a wallet that's actually sits on your computer, on your hard drive?
That is one option. I would say that many people now are going towards what we call a hardware wallet. Basically, is a jump drive. You plug it into your computer, you get it all set up. There's a PIN number on it, and now basically your entire computer can be infected with malware. But since you have the hardware piece that doesn't cross the barrier between your computer and it, other than to sign the transaction, you're no longer at risk of basically there being keyloggers or some kind of virus on your computer that would swipe your keys.
Right. And so, I mean, that sounds a little bit tricky to set up. I mean, how difficult is it?
Actually, it's not too bad, other than the hardware wallets are on back order till like September. It's really not bad at all. They give you pretty step-by-step instructions. They actually tried to make it kind of idiot-proof to some degree. And literally, it's just a jump drive you essentially plug into your USB port. And you can... I know they have Ether support on there as well as Bitcoin, so you don't need two jump drives for different currencies. I think they're actually bringing on support for some other ones. I haven't been following it too closely, but that's certainly one way you can store it. Now, you could store it on your own computer. You could store it at other exchanges.
So these jump drives you're talking about, I mean, how much do they set you back roughly?
Like under $70.
Oh, okay.
So not bad, yeah.
Right. I was sort of wondering if that was maybe something that you should consider when you start getting a bit more serious about it and you have a fair whack of cash in, or not cash, but a fair amount of Bitcoin. But, for $70, I mean, that's pretty minimal.
Yeah, I think a lot of people thought that, and that's why, after this largest price rise, we've seen, them back ordered till, I think it's September. I'm not quite sure, but I know they were sold out for the last time I asked somebody if they were getting it.
Okay. So you touched on fees before when you go from fiat currency into Bitcoin on, let's say, Coinbase as an example. Where else do you pay fees? Like, do you pay fees every time you send Bitcoin to another wallet or onto an exchange? Or are there any transactions that are done without fees?
It's kind of interesting you bring that up, because the Bitcoin network, one of the big criticisms and source of a lot of political wrangling, is the scalability of Bitcoin. Satoshi, way back in the day, put the 1 megabyte cap on blocks. Now, we've been running up against that, and we've seen the need to actually apply a higher transaction fee to send Bitcoin across the network to get picked up in a block. When this basically backlog of transactions happens called the mempool, you now need to adjust your fee upward to get it into a block and have it confirmed. So, I mean, if I was sending Bitcoin to you, if we wanted to basically confirm within 10 minutes, we're probably paying, somewhere between 50 cents to $1 now, depending on the size of the transaction and some other factors. So it's interesting that Bitcoin actually has become kind of expensive now to move across borders when it used to be, half a penny. So those are things that are, it's kind of coming to a head here within the next couple months of whether there will be a scaling solution and agreement on it or not. They'll make probably interesting tradable event, but there's fees there, as well as when you go on exchange and you're going to, buy and sell Bitcoin, depending on the exchanges, you're paying fees on that. It's usually, though, quite a bit less than what you pay at a typical broker. I suppose that's a little bit dependent upon the size you're trading as well, but some of the fees are quite minimal.
This week's episode is brought to you with the support of Audible. With Audible, you have a truly unmatched selection of audiobooks at your fingertips, but also original audio shows, news, comedy, and more from the leading publishers, broadcasters, entertainers, and business information providers. So just a couple titles I think you might really like, which are of course available on Audible. Hedge Fund Market Wizards by Jack Schwager, Reminiscences of a Stock Operator, which has been recommended however many times on this podcast, One Good Trade by Mike Bellafiore, and a book I've actually read a couple times myself, and it's been quite helpful, Inside the Black Box by Rishi Narang. Now you can actually go ahead and get yourself a free audiobook today with a 30-day trial using my special link, which is audible.com/traders. Okay, just to spell that out, audible.com/traders. Get a free audiobook now and tweet me. Tell me what you're listening to. Also backing this episode is the brilliant HP workstations. With prices starting at just $1,465, HP workstations offer maximum performance through unique technologies, allowing you to go beyond the basics to maximize your productivity and make IT management easy. HP Z workstations are highly customizable, so you can mix and match to build your ideal configuration. Plus, HP offers free shipping and returns, as well as free customer support 24/7, 365. And right now, you can get an exclusive offer just for being a Chat with Traders listener. Get 15% off select HP workstations with an Intel Core i5 processor when you go to hp.com/traders and enter the code TRADERS at checkout. That's hp.com/traders and enter code TRADERS to get 15% off select HP workstations. Please note this discount is valid until the 31st of July. Whether you have a small business that is looking to grow or you are established and ready to take the next step, HP's workstations with Intel Core i5 processors are for you. Yeah, would you mind expanding on the scalability issues a little bit more and paying extra fees to get your transactions across quicker? Could you just go into that a little further?
Yeah, so, I mean, a long time ago when Bitcoin was just a technical experiment, Satoshi ended up putting in that the block size, which means is how many transactions can fit into each individual block, would be 1 megabyte. Back then, it was they just put that in there just as kind of a placeholder. Now we've come multiple years, and now Bitcoin is a $40 billion currency, and people want to scale that. Now, the miners that want transaction fees, they're not wanting to go along with this because they want to collect more transaction fees as long as they can. And there's a tremendous amount of politics that are going on between the different users of Bitcoin, whether it be the miners, whether it be the actual users of it, the wallets, the exchanges, and then the people, developing the code, the core developers. So basically, we've run into a situation where the network is processing so many transactions that now you're having to raise the fee to get into these blocks. And if you don't raise if you try and send a transaction with zero fees, it's possible it might not confirm for days. And depending if there ends up being a pretty big backlog of transactions that have fees in front of you, you just keep going to the end of the line. So I've never actually had that happen. I know some people have gone about doing services to try and get it accelerated and paying basically mining pools to mine that block for quite a very large fee that they now want to get through the blockchain. So, these are issues that are coming up as far as the scalability of Bitcoin. And it's been a lot of the other currencies, including Ether, have been trying to kind of say, hey, we're cheaper now and our network can handle the scalability, which is funny because today, or really yesterday, during one of the ICOs, we actually saw the Ethereum network have scalability issues as far as getting transactions in, and the network was really backlogged. So it's not quite as cheap to send Bitcoin anymore unless we get some of these scalability issues in place, and more than anything, that there's consensus for it.
Okay, but how do you actually decide how much you're willing to pay in fees? Like, do you have any say in that, or does it depend on? So
the wallets you use, they actually are pretty good now, where it's kind of dynamic, and they'll tell you like, if you pay this fee, you should be in the next block. If you pay this fee, it's usually they'll change it into a dollar amount for you too, and tell you you'll be in the next 3 blocks, so 30 minutes. So it has gotten to the point where they'll kind of, they're estimating about what fee you pay, you should be able to get into the next block or so. So it's not quite, you aren't just picking something out of the sky. And even the exchanges that do transactions regularly adjust those and give you kind of a suggested fee so that your transaction would actually go through. So does that make some sense?
Yeah, it does. Just I'm going to fire another question your way around that. When you talk about the block, and I have a feeling we may have spoken about this when we did the last podcast, but what is the block actually referring to?
The block is basically, there's a period of time between this really difficult puzzle being solved. And during that time, basically the transactions that are coming in are getting assorted based upon highest to lowest fee. And as we get up to the 1 megabyte cap, those are the transactions that are going to go through the block. And then when the block is solved, which is this complex math problem, they now are fully put into the blockchain, and you get one confirmation. Then your transaction is now confirmed, your transaction is in the blockchain officially, and then the miners just move on to solving the next problem, and the next block is basically compiled the same way.
Okay, so how many transactions? I don't know if this is the right way to ask the question, but how many transactions would it take to fill up a block of 1 megabyte?
I actually don't even know the answer to that question.
Like, I presume it would be thousands and thousands, right?
Yeah, and it's also dependent upon like how complex your wallet is. Like if you sent one transaction to your wallet and there's say 10 Bitcoins there, and you send it once, your transaction is actually smaller in bytes, as well as you'll require less of a fee to get it into the blockchain. But if, say, you sent 3 Bitcoins in from, I don't know, let's say BitCVIX, and then 3 Bitcoins in from Poloniex, and 4 from, another exchange, and then you try and send that, the fact that they're actually needing to go back and look at where those transactions have come from now means that your transaction has more size to it. So it's going to cost you more. Does that make some sense?
Yeah, I think so. Just a question around the mining of Bitcoin. And I have a feeling this is maybe also something I asked you last time, but is it possible for all coins to be mined? Like, is that ever going to happen? Or is it set up in a way that there will always be more coins to continue mining?
Yeah, it's an asymptote. So it approaches, but it can never actually reach the 21 million in existence, at least in as far as Bitcoin goes. So there'll always be some block reward. It'll just, I think it's every 4 years. It's actually based upon how many blocks, but it takes about every 4 years. The block reward, the mining reward for solving blocks halves. So, as you can imagine, it started at 50, it went down to 25, 12 and a half, 6.75. It's just going to keep going till, it can never actually reach zero. So there'll always be new coins entering the system. It'll just kind of grind to a halt, though.
A little bit earlier, we kind of spoke about how to turn your fiat currency into Bitcoin, for example. Let's say someone wants to buy, let's say Ripple, just as an example, one of the lesser known but somewhat becoming increasingly popular cryptocurrencies. How do you actually buy Ripple? Like, how do you go about that? Do you need to be holding Bitcoin and then convert that Bitcoin into Ripple, or can you go straight from fiat currency into Ripple like you can from fiat currency to Bitcoin with something like Coinbase? Or what's the process of doing something like that?
There might be, I'm not quite familiar if there's any, I'm sure there's some exchanges that are allowing Ripple to USD pairs. So if there's a way you can fund those accounts with US dollars, you'd be able to go about doing it that way. But I would say probably the most common way of doing it is to first buy Bitcoin and then go to an exchange that has a Bitcoin Ripple pair. Coinbase doesn't have it. Gemini doesn't have it. But, Poloniex does. They are US based. They have a lot of the, altcoins or other digital assets there. So, the gateway usually ends up being Bitcoin. It's not the only one. There's, Litecoin and Ethereum both seem to have fiat gateways that have kind of come about, especially in this last bubble or adoption push. The most common way to access those other currencies is probably going to be to first buy Bitcoin.
Okay. So let's say someone just wanted to hold Ripple. I'm not saying you should, but let's just, as an example, if someone wanted to do that, they would essentially, if they were to do it through, Poloniex, they would essentially be holding all their Ripple on an exchange, wouldn't they?
Yes, yep. If they keep it there, they have the counterparty risk of the exchange as their risk.
Okay. And is that, like, generally speaking, is that a smart thing to do, or is that something you'd probably advise against doing, is actually holding your money on an exchange if you can avoid it?
The issue is even though Bitcoin might be a really fantastic vehicle to send across the earth and to use when you're in possession of it, when you have a third party, whether like an exchange that now has custody of your, they're holding the private keys. So when you ask them to send Ripple somewhere, they're obliged to do it. They could say no, they could get hacked. There could be plenty of different factors where those coins on there are no longer, they're not yours until you send them to your own wallet. But more so, there's the risk of that counterparty, losing the coins, getting hacked, or something to that effect. That's why, for traders, we do have to have some coins on exchange. But if you have a large holding, you should either diversify at minimum or look to some kind of wallet solutions that you hold the private keys. So, that Ledger wallet, that hardware wallet I was talking about is one solution. There are a number of other ones.
When you say diversify, in what way are you talking about diversifying? Like diversifying your holdings across multiple exchanges?
A lot of these exchanges trade the same asset. I'll use an example. I know you're using Ripple, but I'll use Ethereum. Outside of Bitcoin, I would say Ethereum or Litecoin is probably the most popular. So, I mean, Ethereum trades on Poloniex, it trades on Gemini, trades on BitFinex, trades on, Chinese exchanges. So if you put all of your coins on one exchange and that exchange goes down, whether it be, temporary or otherwise, you don't have access to those coins, or it's possible you could lose all of them. So I would suggest at minimum, you shouldn't hold all of them in one place, whether it be on other exchanges, or probably the more prudent thing to do would be to actually have a hardware wallet where you keep the majority of them in your possession.
Okay, sure. Since we last spoke, I think one of the major hacks which has happened, and feel free to correct me on this, was the BitFinex hack. I mean, can you tell us a little bit about actually what happened there, and maybe we can go into that a little bit?
I mean, the BitFinex hack, definitely not the largest, but one of the largest. It was 120,000 Bitcoins at the time. I don't know, I can't really do the math in my head, but that's
a lot of money.
Yes, it's a lot of money. The interesting thing about the BitFinex hack is they were using a implementation of BitGo, which BitGo, they sell themselves as a software as solution company, even though some may say their website doesn't really look like that. And basically, they were auto signing these transactions. It was 120,000 Bitcoins left Bitfinex in under, I think it was like 40 minutes. And there's multiple signatures involved. Bitfinex was one of them. Bitfinex has another one in cold storage that wasn't used, but the other signee was BitGo. Since then, Bitfinex introduced basically a debt token. They've since paid all of that back to their debtors and retired the token in under a year. So it's kind of a successful failure in a way. I don't really know how to describe it. Certainly people that received the debt token and took, I think it was a 33% haircut or a 36% haircut at the time, did not receive all of the funds that they originally had on that exchange. Others that waited maybe did.
So what's a debt token? Is that like an IOU or something?
Yeah, I mean, that's pretty much what they did is they introduced called the BFX token, Bitfinex, BFX. They issued the same amount in dollars that they owed to each person, because the haircut of losing 120,000 Bitcoins was, I'm not 100% sure, it was either 33 or 36% across all people on the exchange. So you had $100,000 there. Basically, they took, $33,000 from you, and they gave you the same amount in debt tokens. The debt tokens traded all the way down to, it's supposed to be $1 per debt token, but I think it went all the way down to like 30 cents or 20 cents, especially after the hack and people dumped their tokens. Eventually, it was redeemed for $1. They retired the entire outstanding debt that they had.
Right. So the people who were responsible for the hack, were they ever caught? Does anyone have any idea who was behind it?
I know there's still some investigations going on, but I have no idea. I've not really heard much from that. Bitfinex, not long after the hack, did kind of put out a press release saying, hey, hacker, if you want to spend some of your Bitcoins faster, how about let's arrange a deal where you give some back and we'll give you a more anonymous currency like Monero. It was an interesting gesture. I'm pretty sure they did not get any response from that.
Okay. So who actually investigates this sort of thing? Like, who steps in there?
I can only say from what Bitfinex has said. I think they listed a number of authorities. That includes the FBI. I think maybe some of the British authorities as well. That outside of that, I really don't know who investigates that.
Yeah. No, I was just wondering because, I mean, a lot of these exchanges aren't as regulated, obviously, as, your stock exchanges, your futures exchanges, etc. So I was just wondering, like, how much authorities really were concerned about these type of events, if at all.
I mean, I do think it was a very high-profile hack. It got quite a bit of coverage from Bloomberg and other mainstream financial news services. So I certainly think they're involved. I just don't know to what degree and who all the parties were. I mean, Bitfinex still hasn't been that forthcoming as far as all the stuff going into that. And it's been a criticism of them. I don't really know.
Okay. So, obviously this hack, which we've been talking about, is quite a high profile hack. Are there smaller hacks which are happening much more frequently, which perhaps don't get as much coverage? Like, is that something which is taking place quite frequently still?
I'm just trying to think if I've actually heard of any hack recently. I don't know if I really have. There have been issues where, I mean, Ethereum not too long ago cost an exchange, I think it was upwards of 10 million, and it was more of an issue of how they implemented to take Ethereum as far as deposit and withdraw. So, I mean, it wasn't really a hack per se, but it was some kind of exploit that did cost the exchange money. And those things, they are real. I know they still do happen. We just tend to hear about the biggest ones.
How about DDoS, like DOS attacks? Are they something which take place from time to time?
Yeah, exchanges are a very high profile, or a very ripe target for DDoS because it induces a lot of panic. A lot of them are web-based. So the stability of a web-based platform is far less than whether it's standalone or API-driven. So these people, they may DDoS the exchange, but still be able to access it through API. So they're able to, create panic and, take advantage of those things. It also, it seems when some of the coins, especially on Poloniex, which has probably been one of the biggest issues as far as DDoS or just downtime in general, coins will be, rallying, and the DDoS pretty much so stops that rally from continuing. It, taints sentiment, and people are no longer that willing to trade it or just be involved in something that they don't know if they're going to have access to the platform.
Yeah. So, I mean, with all of this being said, like, how do you decide who's trustworthy? Because, like you said, like this is very real. Like, these things do take place. No one wants to be having thousands and thousands of dollars somewhere and sort of be overly concerned about the possibility that they might lose all that money through no fault of their own. Like, how do you decide who you can trust? I mean, are there any red flags for, I guess, like signs for exchanges or wallet providers who you should stay away from?
I mean, the one good thing about the Bitcoin community is all these exchanges are essentially startups. So they're usually pretty small teams. They're not really large organizations, and these people that are running them or, representatives from them are very accessible. So one of the really good things that has come about after, the Mt. Gox hack and fall of Mt. Gox some years ago is the exchanges actually, many of them we do talk to quite regularly. I mean, daily, with many of them. So some of that is these people are here present in our community. We talk to them a lot. We definitely give them a lot of flack, rightfully so, when things aren't going right. We see how they kind of handle under that pressure. Do they just shut down and not want to hear us, or do they take that criticism, make their platform better, and stuff like that? So all of that kind of goes into a trust element where if you're going to trade Bitcoin, you have to have some element of trust to put your money on these exchanges. Thankfully, the double-edged sword of leverage has actually made the ability to trade Bitcoin more so because you no longer need to put as much on exchange to have the ability to trade as much as you would have before. Certainly there's other risk associated with that, but leverage is actually one that mitigates some of your exposure risk to putting more coins on that exchange.
Okay. Yeah, that's actually a really good point you bring up. What sort of leverage is typically available?
Depending on the platform, I mean, I think Poloniex and Bitfinex are in the like 3 to 5x range, Kraken as well, and then you can get on to some of the derivative instruments. BitMEX has all the way up to 50x, maybe even 100x. I know they scaled that back a while ago. Some of the Chinese platforms, 20x. So, I mean, there's a pretty wide spectrum there as far as the amount of leverage you want to play with.
Yeah. Okay. All right. I'm just thinking about what we should tackle next.
You brought up before. I think your first question was how would somebody get Bitcoin? But as long as we were talking about leverage, the next point would be trading Bitcoin, right? It's not as intuitive as people think, especially people that have been accustomed to setting up maybe a brokerage account and trading Forex to stocks to commodities. Bitcoin is not. It doesn't have as much. It has a very minimal exposure to the legacy system that people are used to trading. Now, I say that because there is an instrument called GBTC. It is Barry Silbert. He was the creator of Second Market, which was famous for offering shares of Facebook in private before they went public. And there's a bunch of other tech companies in there, but he actually is the only one that has a Bitcoin related entity that trades on, I think it's NASDAQ OTC. It's a closed-end fund. So people that say want to go through Fidelity and never want to touch Coinbase or buy Bitcoins and deal with the custody aspects that we were describing before, they could go on to, their TD Ameritrade platform and trade the ticker GBTC. It's the Bitcoin Investment Trust. Now, there's like a lot of funds, there's fees involved. And right now, the most interesting thing is it's trading at about a 90% premium. I mean, it's at like $4,400 right now. So, it's a 90% premium to net asset value of Bitcoin that it's supposed to track. So you have that. You have the constraints of the typical stock market hours. So it does close. But, that is one element of where if somebody wanted to trade Bitcoin, they could do it through that vehicle.
So what do you mean by it has a 90% premium?
Yeah, so, I mean, right now Bitcoin, as we said, is at $2,600. So the Bitcoin Investment Trust is supposed to buy and sell Bitcoins and keep their share price, the share of GBTC, in line with roughly what the Bitcoin price is. Due to a number of things, probably being a lot of the interest in Bitcoin, as well as people maybe not wanting to go to Coinbase and deal with the security and storing Bitcoins, it's trading currently at about a 90% premium. So the GBTC price is $4,400 right now compared to the $2,600 that's sitting on all the Bitcoin exchanges. So it's inflated quite significantly. Okay.
So it is meant to track the price of Bitcoin fairly closely then, but obviously it's not right now.
Yeah. I mean, it's supposed to be, but currently it's quite disconnected from the price.
Okay. This isn't in any way similar to the ETF which the Winklevoss brothers were trying to put together, is it? Or is that totally different?
No, it came quite a bit before the Winklevoss. I'm not a securities lawyer, so I don't know how they got it through onto the OTC market. But basically, the Winklevoss were trying to launch on, I think they went to BATS finally, but they were trying to launch a full ETF on there, not a closed-end fund like GBTC. So it has kind of similarity to it, but largely it's not an ETF. It's just a closed-end fund that GBTC is. So it doesn't quite behave the same as what an ETF would. And obviously, we can see some of the downsides is, the premium has kind of run away in GBTC. Personally, I don't know how people could trade it, but I mean, I'm coming from kind of a Bitcoin-centric place that I've traded Bitcoin for years, though.
Of course. And that ETF that the Winklevoss brothers were trying to get off the ground, I mean, what was that ETF going to consist of? Like, what was it supposed to consist of?
Well, my understanding is the Winklevoss have quite a large holding of Bitcoins as well, and that was supposed to be their net asset value. The ETF, though, was supposed to go about buying and selling Bitcoins to try and keep that in line with an index price. Actually, it was a closing price that the Gemini exchange has been recording for probably like about a year now, maybe a little bit longer. So there were definitely steps to turn it into, a full-fledged ETF. And I think that was the idea behind it. What ended up happening is the SEC basically ruled that the Bitcoin market is too unregulated, and they couldn't see offering an ETF on a market so unregulated, which a lot of us have kind of taken to mean like, well, you kind of shot down all ETFs, because it's not like the Bitcoin market suddenly going to become regulated within the next couple months. So that, they appealed the decision, but I don't know if anything good is really going to come of that, because it seems like the SEC has determined that the Bitcoin market is just too not out of their purview to want to bring a product onto exchange like that.
All right, so let's. I think what might be interesting to go into, I know we kind of maybe hit on it a little bit earlier, but is actually talking about Bitcoin as a bubble. What are your thoughts? Is that something you want to get into?
Yeah, one of the interesting things about Bitcoin being a bubble versus is Bitcoin in a bubble. So I feel like a lot of this has been dispelled, but I still see, just even last week, people calling it beanie babies and tulips, and it just kind of like we go through these cycles, and people suddenly want to throw away that Bitcoin is a really awesome technology, a real quantum leap in technology, and just look at the price and say, oh, that's got to be it is a bubble. It's a Ponzi scheme. It's yada, yada, yada. But, the internet, the .com bubble, there was a lot of companies that pets.com and such like that. But the internet survived the .com bubble. And I think we all realize the utility that came of the internet. There was a bubble in those stocks and what was riding on the internet technology, kind of the same way that I feel like we're in now with Bitcoin. I do think the market is exhibiting bubble-like symptoms. We see a hype cycle. We see a lot of people coming out that wouldn't otherwise, track Bitcoin. We're seeing a lot of that through the media. The massive influx into a lot of the social forums, whether it be Reddit, Telegram. I mean, we maxed out the Telegram channel in like less than a month. There's lots of things going on that feels like a bubble. And as I was saying, I was at this New York conference, and it's every other person has some project they're working on. This on the blockchain, that on the blockchain, and we can get into it a little bit later about the ICO market, but it feels really frothy.
Okay. I guess this is probably a good question to ask. Like, what is a bubble? Like, everyone seems to be very keen to just dismiss this and just call it a bubble. But I mean, what exactly does that mean? Does that just mean that they think it's overvalued, it's too expensive?
Yeah, and I think the kind of the surrounding things that go into it, kind of the mania and the emotion, kind of give people this feeling that if it's too good to be true, it can't be true kind of thing. And, the unfortunate thing is a lot of people, especially, this is the fourth or fifth bubble that Bitcoin has been in. They've dismissed Bitcoin as a technology and the utility it serves, and never really decided to get interested in Bitcoin because they said, "Oh well, it's a bubble, and the bubble has negative connotations," and they couldn't take it seriously because of that.
I mean, what are your views on it? Like, if we zoom out and look at the big picture, I mean, is there any reason why Bitcoin couldn't be worth? I mean, I don't want to name a price, but let's just do it anyway. Let's say like $10,000 within the next 5 years. I mean, there's no ceiling on how high it can go, though, is there?
Some people have tried to quantify it based upon market caps of, say, companies. Some have said it on what if Bitcoin could capture 10% of the gold market? Kind of from a commodity perspective. Some people have also looked at it from, where does Bitcoin rate in the world currencies? And I haven't looked recently, but I think we're at probably over all of the African countries and some other ones. So there's different perspective on people trying to quantify how high it can go. It's interesting, but I don't know if there's really a correct answer.
Because to me, it seems like people just want to call it a bubble because they think it's too expensive. But I don't know. I don't see why it can't go as high as it wants to go. I don't see there being a ceiling, although I obviously know a lot less about it than you and a lot of other people. But anyway, just from that's my 2 cents. A buddy of mine actually has this theory, and I'm interested to get your take on it, that younger generations, quote unquote millennials or whatever you want to refer to them as, don't trust the stock market for investing purposes. And he has this idea that a lot of them are going to gravitate towards putting their money into Bitcoin or Ethereum or some other cryptocurrency. It just sort of seems like more the thing that they would get into. What do you think about that?
I tend to agree. I mean, I'm a millennial. I might be on the kind of outer edge of being a millennial and what it means to be a millennial. But one of the big things that led me to Bitcoin and a lot of the interest in it was I used to be a gold bug. I used to be very philosophically sound money, hard money leaning. But as a millennial that carries, like we all do, cell phones around and you're zipping emails, I always thought it was kind of strange that holding this physical gold is what I aspire money to be. And, Bitcoin filled that missing piece of the full digital version of that. And I think millennials as well, not just their distrust into the stock market, but I think they're coming to realize that, money doesn't have to be this physical gold thing. It doesn't have to be a physical bill. So they've actually already separated that bias that I think older generations have a harder time dealing with, but they've just accepted it now.
Yeah, no, it's an interesting thought. I mean, I tend to agree. I mean, I think it's certainly possible. Let's get into this ICO topic. I don't even know what an ICO stands for, and I only heard of it literally about a month ago for the first time. Do you mind explaining to me and I presume probably a lot of the people listening, what is an ICO?
So first of all, ICO stands for Initial Coin Offering. Now, it sounds to the people listening a lot like something called an IPO. And there are similarities to an IPO as well as crowdfunding. So what happens now is a lot of the big projects that have been coming out, to name a few, some of these projects that are using the Ethereum blockchain I don't endorse these projects. I just want to give some color to what's going on in the space. Patientory, which is trying to put medical records into these Ethereum contracts. There's Wager that's trying to do sports betting through Ethereum contracts. And then there's Civic, which is trying to break identity verification to the blockchain. Now, I don't want to go into those projects. I just wanted to give some color to what's going on. But when these projects come about, basically, some of them have very well-known people that have been in the space for a long time. They're eventually going to do one of these ICOs. What's interesting is there's some kind of, I'm not a securities lawyer, but in the crowdfunding that goes on like Indiegogo and the crowdfunder, they can't actually sell equity of the company to just, Joe Blow down the street. They need to get accredited investor status, and there's a very long process. But what they'll do is those companies have been kind of confined to a lot of like widget companies that, you can buy some widgets that they're going to make. And some of them are cool. I've looked at a few of them. But what is going on in the ICO market is basically you're buying the token that this project is going to ride on. So this project, for example, Patientory, they're doing all this medical records on their Patientory token. So they're initially selling off these tokens, and the value of that token will be traded on exchanges, or so the token will be traded on the exchanges, and the value will fluctuate based upon how they're progressing with the project. So, that's what's going on right now, and there's incredible demand for these projects. I think I kind of told you about what I call it, missed boat syndrome. I think a lot of that is going on in this ICO market. People maybe made some money in Ethereum, and now they're looking to put it into other projects. They're raising tens of millions of dollars, sometimes in seconds, minutes to seconds. It's another kind of sign to me that this market is just, it feels frothy from people trying to seek out more yield in, whatever's kind of new on the block. Does that make some sense?
Yeah, okay. So how do they actually buy an ICO? Like who's able to buy an ICO in a company that's offering these?
So most of these projects are using some kind of Ether contract. So you're sending your Ether to this address. From that, the address processes it and will eventually give you the tokens for this project. So some of it's open to anybody that has Ether. And I think one of the big reasons Ether has appreciated so much over the last several months is these projects pretty much so require that you have Ether and use Ether, and they get locked up into these projects for some period of time. So some of them don't do any KYC at all. So, it's open to anybody that basically has Ether.
Essentially, why these companies are doing these ICOs is it's like a sneaky way of raising capital in some ways.
Yeah, it's pretty much so. It's a way to raise capital to get their project going as fast as possible. So they take in these funds, and many of them are at least somewhat transparent about what they're using the funds for. 5%. Each project has its own kind of stipulations, but the idea is they can take this money and start working on stuff of value that will add value to the platform as a whole, which will result in appreciation of that token.
So each token is almost like a little piece of equity of that company?
Well, I want to be careful because I don't think they would describe it that, namely because if it was some part of the company, then it's equity, and probably talking about the SEC getting involved. And that's kind of another story because they may very well get involved at some point. But the idea is basically they have a project. They've launched a token. The value of the token fluctuate based upon their progress in the project. So you have basically a piece of the potential of what the project can yield.
Well said. Well said. Very diplomatic. And how long have these ICOs been taking place for? Like, is this a very new thing? Like I said, I only just heard about it like no more than a few weeks ago. How long has this been going on for?
I would say that the real kind of craze with the ICOs has been, this is something that's been maybe like a six month kind of heat wave. There have been a number of ICOs that have occurred before that of lesser known coins, but I mean Ethereum itself had an ICO. That's basically the way they launched their project. So I mean, people that bought the ICO for Ethereum back in 2014, they basically got one Ether was roughly 30 cents. So now, as we sit here today, Ether is sitting around the $300 range. So you're talking, what is that? 1000x?
Let's run with that. Yeah.
Yeah. So, I mean, basically, I think a lot of that has set a standard where people think, okay, I want to get in right away, kind of at the ground floor. And then, the development on this project will cause the tokens that I bought to appreciate, some of it being staggeringly high as far as Ethereum and some other success stories. So there's where the appeal to speculators has come. And that's why I believe like it's almost at the point of being, frenetic. The frenzy that's around some of these ICOs is incredible. Even yesterday, the Status ICO, I don't really know what the project is about, but there was literally so many transactions sent into this to get a piece of this ICO that it basically froze the Ethereum blockchain. Like there was such a backlog of transactions that they couldn't process new incoming transactions. Like it was hours to get a transaction through. So, I mean, to give you some sense of the demand that is there, I just kind of put my finger up in the air, and feel the wind, and I'm just like, wow,
Have you yourself taken part in any of these ICOs?
I actually am kind of ICO adverse, mainly because I don't like the idea of locking up capital for any period of time that I can't immediately trade out of it. There's certainly projects that I may invest in or am interested in. I have a pretty strong appetite for sports betting, so Wager being one of those projects that I think is interesting. I still have to do quite a bit more due diligence, and this is by no means a recommendation for it. I think the projects out there that are going on are quite interesting.
Okay, right. Now, just one last thing I want to, I guess, briefly talk about, and then we should probably think about wrapping this up. And I know a lot of people asked me to ask you this question. I mentioned that I was going to be having you back on in the Chat with Traders Facebook group. Obviously, Ethereum has gained quite a lot of popularity. What is the big difference between Ethereum and Bitcoin? Like, how is it different, and is it superior in any way?
There's some very deep technical related things, but what I can tell you is think of what Bitcoin does really good is it transfers value. What it doesn't really do, it's kind of dumb though. I mean, it transfers value really well, but it can't do a lot of other things. Ethereum is kind of the king of applications. So when you talk about taking the technological advance that is blockchain and moving it to much more advanced things, whether it be doing sports betting or those medical records and all those kind of things, Ethereum has what's known as a Turing complete programmable code in it. And basically what that means, I'm not a tech guy, so I hope I don't get any hate mail, is it gives it the ability to do more complex things. Those things, now when you ask if it's superior, I think the jury is still out. I'm going to be trying neutral on this. I initially was skeptical of Ethereum. I've since shed a lot of that and do have a lot of interest in it. But those complexities, as far as the code you can put into Ethereum and how to do a lot more things, means there's more moving pieces and for more things to go wrong as well. So, it comes at a cost. And we still don't, a lot of these projects that are coming out now, even some that have come out for a couple years, don't really have a lot to show for it. They're still just an idea. And until those ideas turn into something where we're actually seeing what was promised done, that's where we'll see if Ethereum really is, I guess, superior.
Okay. Time will tell. All right, man. Well, let's leave it at that for now. Is there anything else you want to add, or are we good for the time being?
I'm just looking over my notes. I think that's pretty good. Yeah.
Okay, cool. Well, I appreciate you coming back on. It's an absolute pleasure to have you on the podcast again. So thank you very much. Where's the best place for listeners to go to either find out more about you? And I don't know, I'm sure that people are probably going to have a few questions after having listened to this. Are they best to just maybe hit you up on Twitter, or do you have another suggestion?
Yeah, I'm extremely active on Twitter, still at BTCVIX. Also, our Telegram groups have been exploding. We've actually, several of the groups, we've reached the 5,000 user max, but we have the crypto groups Telegram channel actually provides all of the channels that are in our family. And that goes for anything from, Ethereum to Bitcoin to Ripple to a whole other, subset of currencies. So you can go on the Telegram channel, type in @crypto groups, and that will direct you to whatever channel that you want to engage in.
Okay. Oh, that sounds pretty simple. So that's all they got to do.
Yep.
Very good. All right. Once again, man, thank you for doing the podcast.
Thanks, Aaron.
You've reached the end of this episode of Chat with Traders, but rest assured there are more episodes loaded with real market insight and zero hype on the way soon. So to stay updated with each great new release, subscribe to the podcast in iTunes, and we'd love it if you'd leave a rating and review. We'll catch you next time on Chat with Traders.